Hey, good morning. Tony LaPorta here with NakedTrader.com. A couple of markets I want to touch on this morning. I want to touch on, well, the indice markets, they're going to open higher. I believe we're in a corrective phase now. So if that's the case, you want to sell the opening or let the buy smoke clear and sell it. I think personally, the buy smoke is coming before the opening. So anyhow, but that all that aside, the gold market. It's right now trading 1339 and some change. Yesterday we broke that neckline and closed weak and closed like $11-12 through the neckline. And I wrote last night in my commentary, we need to see this market follow through lower this morning, and we are getting that follow through. It looks like we just hit some stops below 1340, and I believe this market has a 1320 handle in it today. 1328, 1329, whatever. I think I have a point at like 1328.10, something like that. You want to be short this market, and this is no time to be getting fancy and thinking you want to be long. The CME, George Cavaligo sent out an email this morning. The CME raised margins on gold and silver. So that will put more pressure on the longs to do some selling here. Okay, this is a head and shoulders top in the gold, and the objective is 1260. So we'll see how this one goes. Like I said exactly a week ago when I spotted this second right shoulder being built, that come to my weekend commentary and or come and sign up for a free trial and get my weekend commentary, and you can look at the daily chart as well as the monthly chart. And I put out the monthly chart. I've been putting it out every week since 2002. So you can see the breakout back there at like 300. There was a triangle formation. Anyhow, that's neither here nor there. If this sell side gains momentum, I think we could see back down around 1,000. So we'll see what happens. Anyhow, the Treasury note chart. If you measure from the December lows up until the squeeze from last week, up until the highs last week, the 61.8 retracement level was 119.21 and some change. Yesterday's low was 119.22. So, and it hit right on the support line that I've had on my chart for quite some time. The bonds traded below that support line and finished below that support line. And I wrote my commentary last night, but I didn't. If it was going to finish below the support line, I would have preferred to see it finish convincingly below that support line, and it didn't. And this morning, with the bonds trading 119.27, it's actually back above the support line. So we want to keep an eye on this 10-year level. If the 10-year closes firm today, if it closes up near its highs of the day, that could have been it. And there's a lot of bears out there. This is reminding me of the 114.06 level when, I don't know, last year sometime, when the whole world was bearish the bonds. And I'm like, well, I have a retracement level here. I think it was a 61.8 at that time. Might have been 79, but I'm not sure. And the whole world was bearish the bonds. And I'm going, well, I don't know. I think you want to buy them. So I think it's all different now. I really fear being short this market, but I just hate being the same way as everyone else. So keep an eye on those notes. Keep an eye on that 119.21.22 level. Obviously, if we get a firm close, I'd say back up around 120.10, 120.5. We could be good again. We could be good for another 2 to 3 month bounce. That's about all I have. You have a good weekend. This is Tony LaPorta with NakedTrader.com signing off. Cheers.